Good morning. Welcome to Forex In 4. Today is Thursday, November 10th, 2011. All right, actually this morning we're starting out and we're looking at the pound as opposed to the euro just because I'm getting a little bit tired of, the euro. But we're going to discuss it in great length in a couple seconds here. I just want to show you what's going on with the pound here. You can see pound is just moving higher, just broke out of this early morning range. Okay, they had their interest rate policy decision, and they didn't change anything. They left rates unchanged at 0.5%. They left the asset purchase target plan at $275 billion. Now, if I recall, it was increased last time. All right, and that means that they're not embarking on further easing at this point in time, which means that the pound is strengthening here versus the dollar. Now we have, the market's bouncing back a little bit after yesterday's massive sell-off. You can see here pound down from the 161 level, and it looks like we settled right ahead of 159 right there, and we're back to moving higher. So what's been going on in the markets that's creating all this volatility? Well, we know it's the euro, so let's just take a look. So euro chart looks very similar. Okay, you can see that we had this range set up here, which the range actually broke down. Once it did break down, you can see we came all the way down to about 135, which is an area identified yesterday as support. All right, and we've got a little bit of a bounce higher. Now, the whole catalyst for this move yesterday was that bond yields in Italy were soaring, okay, above 7%, and there was some concern that that was the level that Portugal and Ireland and all these places had to take bailouts, and it's an unsustainable level for Italy to be able to maintain their debt. But they did just have a bond auction which was oversubscribed. They got it all off, which is a positive, so they still are able to fund. Okay, but we're really concerned about what's going on over in Italy. So, yesterday I mentioned that Berlusconi's agreed to step down after this budgetary process was done and the austerity measures were put in. Well, people are saying that, he might stick around for a while, and actually he might try and orchestrate himself back in. Well, it looks like they're saying now that he's definitely going to be out next week. So we'll have to see how that goes. But they want him out. They're talking about the next guy coming in. He's a what we call a technocrat, where he's got a very business, if you will, and banking background. This guy Monti over there in Italy, so he may be the next premier over in Italy. So we're gonna have to see how that all plays out. But you can see euro bouncing back here a little bit higher. All right, but the news isn't still great. I mean, we have these problems in the eurozone, and we can sort of talk about the fundamentals a little bit. I mean, they are important. It's just not as when you have situations like this happening, it's not as significant as it might otherwise be. But essentially, the two big pieces of news out of Eurozone this morning were German CPI data. It came in a little bit higher than expected, 2.9% on the harmonized year-over-year number versus an expectation of 2.8%, and just the headline figure was steady at 2.5%. All right, and then the other thing to note is that French industrial production came in lower than expected, 2.3% versus 3.9%. All right, that's the year-over-year. The monthly number was the negative 1.6%. They were expecting negative 0.6. So not a good sign over there in the eurozone. All right, the ECB publishes their monthly report, and they've lowered their economic growth forecasts as well. So things not looking so hot in the eurozone. But in Australia, we take a look now. This chart's going to look very similar because we know that Aussie and Euro are pretty highly correlated to one another. But you can see here these charts are all about the same. We had the bounce here that happened just off of this S1 support at about 10050, so just above about 50 pips ahead of parity here. Now in Australia, their employment numbers came in a little bit better than expected. So they were expecting to add 10,000 jobs. They added just about that number, but the unemployment rate shrank from 5.3% to 5.2%. So that was a good sign right there. I can show you New Zealand. New Zealand. Hey, that chart looks the same too, right? They had consumer confidence, which came in lower than expected, but given what's going on in the market, it's not a real surprise. One of the other things that we can talk about relating to New Zealand and Australia is that in China, all right, Chinese trade surplus came in a lot lower than expected. They were expecting around a 25 billion trade surplus, and they got a 17 billion trade surplus. Their exports were down, all right, 15.9% versus versus 16.1%, and their imports were up 28.7% versus 22.2%. So that's probably a good thing for Australia and New Zealand, all right, as they export a lot of their raw materials and goods to China. So if Chinese exports are going down, imports are going up, that could be an advantage for New Zealand and Australia. So what else do we have today? Talking about Eurozone, real quick, it looks like news is just hitting the tape right now that in Greece they actually do have a new prime minister elected. This guy Papandas, or to be honest with you, I'm not even certain what his name is. Let's take a look here. Just calling him, I don't even, LPAP. But he's a guy who's got somewhat of a business background as well. So in Greece, that process has been dragging out a little while. The infighting there about who's going to take over after Papandreou steps down. Well, it looks like it's going to be this new guy, and the market reaction looks pretty good to it. So you can see here, euro just bouncing a little bit higher. We may get back up to this 137 range, but we're sitting just on the daily pivot right here, just at about 136.40. All right, in the U.S. later this morning, we're going to get initial jobless claims. Which are going to come in. Again, we're expecting about 400,000. Not a great number. Not much changing. We're starting to get news about what's happening here with the U.S. debate over the budget and how to take care of our deficits. Apparently, someone leaked the other day that Democrats walked out of the super committee, that they're refusing to negotiate, and it's just starting to set up the politics here. I mean, we're starting to see these debates happening here in the U.S. over who's going to challenge Obama at the next election. And it's really unfortunate that looks like the campaigning started already, and that nobody's really getting down to work, which is unfortunate because that's what we need. We need these continuing jobless claims to come down. We need initial jobless claims to come down, and we need people to start going back to work. So that's really what's been happening here in the U.S. So we'll see what happens with this news a little bit later this morning, but it looks like we're going to get a little bit of a relief bounce here after yesterday's massive sell-off. Dow was down about 400 points. All right, the futures are set up to looks like it's going to open about up 80. All right, S&P is up higher as well, so that's a good sign. So we're just going to keep an eye on it and see. But right now is the big news is what's happening over in Italy. If they can get this new government formed, all right, if they can get Berlusconi out, get somebody in that the market is agreeable to, all right, if they can start to tackle their austerity and start to get the debt under control, then the situation may be salvageable. But right now, Italy is way too big for the ECB or the EFSF to handle on its own, and should they start to need bailouts, then it could get messy pretty quickly. So that's what we're looking at. We'll see if this bounce can continue, but for now it looks like the risk is still pretty high in the market. So again, I'm just keeping the trading to the short term and not looking to jump into any large positions here. So that's what I've got for today, gang. Good trading to all.